Hello and good morning, everyone, wherever you are. Welcome to our Islamic Finance Stakeholder Engagement Forum. I hope you can hear me from wherever you are, and happy to host you this morning to have a conversation on Islamic finance and kind of draw up a way forward for our market. So without having to waste time, I know there are a few other people who are going to join us in a few moments, but because of time, we want to start immediately. And I would want us to start with our colleague, Safia, who is going to take us through a short prayer. Safia, you're welcome to take us through a short prayer, please. Yeah, as Safia prepares herself, maybe I can take up the mantle and do a short prayer for us. We may bow down and pray. Heavenly Father, we are grateful to you this morning. We thank you for a new day. We are grateful even for the life that you've given us for free. We appreciate you because we are starting an important session to discuss issues Islamic finance. We hope that the deliberations we are going to have are going to have a far-reaching impact that is positive on our market, and we pray that it will be with us throughout. For in Jesus' name, we pray and believe. Amen. So thank you very much and welcome. I will straight away go to the program. Viola, you can put it up so then I can explain to the stakeholders here what is going to happen. So as that comes up, as you can see from immediately up to 9:35, we are having a welcoming note, which I have already done. From 9:35, we're going to have introductory remarks, and our CEO, Mr. Wycliffe Shamia, is going to take us through, that session right from the representative of the NSE through to our chairman and our PS planning. We'll go through that through Mr. Shamia. A bit later at 9:50, we'll be having a presentation from Mr. Farouk Raza, who will be looking at some of the issues, Islamic finance concepts, perspectives from the global stage, and achievements that have been made across the globe in terms of this form of finance. A bit later, at 10:05, I'll be taking you through a brief session of what Kenya has been able to do. The journey that we've walked, what the challenges are, what the achievements are, what are the false starts, and all that, very briefly, for about 15 minutes. Then a bit later, at around 10:20, as you can see there, we'll be having Mr. Abdallah Abdulhalik from Gulf African Bank, taking us through market experience as to what's going on, shedding light on. So where are we as a market? Now then, at 10:35, we'll be having a colleague from West Africa, Anwar, who will be taking us through what ratings have to do with Islamic finance. What has it been like across, that part of the world? And are there any lessons we can learn from the ratings that have happened in that side of Africa? Then we'll be having a plenary session facilitated by our colleague, Joseph Manda, who will take in the Q&A and any feedback and reactions that will be coming through. I have to add here that you are free to also raise your hand and react to each of the presentations to be made, as long as you keep it short and brief and sweet also. Then at 11:20, we'll be having a way forward from Mr. Luke Mbara, because this is where now the rubber will be meeting the road, just trying to understand, so how do we move from here on into the future? Then we'll be having a closing of the same conclusion and appreciation to you, our audience, at around 11:30, so then we can close. We want to keep it short and sweet because, again, today being a Friday, Ramadan is on, also, prayers are on, so we want to release people early so then they can go and engage in other activities. So that's all for the program. And at this point, without having to waste much time, I want to welcome our CEO, Mr. Wycliffe Shamia, who will give us some brief remarks, perhaps, and then welcome our key speakers in this session. Welcome, Mr. Shamia.
So thank you, Justus. I hope you can hear me. Thank you so much for putting this program.
Yeah, Mr. Shamia, maybe the voice you can increase a bit.
So Justus, can you hear me? Can you hear me?
Yeah, slightly better.
Slightly better. Our guest speaker, PS Economic Planning from National Treasury and Economic Planning. My chairman of the board of CMA, Mr. Ugas Mohammed, my directors on the board of CMA, all distinguished speakers, our CEOs, our board of governors, board of the directors in various licensed persons, and also listed companies, distinguished presenters today, our Muslim brothers and sisters who are here with us, experts in different fields within Islamic finance space, my colleagues, distinguished guests, good morning. It is so wonderful this morning to have this session, to welcome you to this forum where we think we need to discuss matters around Islamic finance, which for us, I think it is an opportunity which we can exploit. For a number of years now, we have looked at this opportunity, but I think we need to do more so that more activities come from that space. I want to welcome you this morning. My role is just to let you know you're welcomed to this forum. We are happy today. We have very distinguished speakers who will be speaking to us about Islamic finance, opportunities, developments that we see around the world, and most likely what we should be doing so that we can dive into this very open opportunity. And because of time, I want to end my welcoming remarks there. And if you may allow me, I want to then welcome David Wagema from Nairobi Securities Exchange to make his brief remarks. Thank you and welcome, David.
All right, thank you, Mr. Shamia. And indeed, we are very grateful as the NSE to participate. So on behalf of my chief executive, Mr. Geoffrey Odundo, I would like to appreciate and even recognize the presence of PS, Mr. James Muhati, PS, State Department for Economic Planning, and the chairman of the CMA, Mr. Ugas Mohammed, board members of the CMA, NSC, CDSC, chairpersons and CEOs, and senior representatives of the industry, stakeholders, distinguished guests. Allow me to ride on the protocols already established by Mr. Shamia and say, ladies and gentlemen, on behalf of the NSC, we are really delighted to participate and also be part of this timely workshop. I say timely because I know right now, even as a country, there are different challenges that we are facing that would require all hands on deck. And also finance needs to be inclusive so that everybody has a part to play in nation building and also sharing the great wealth of this nation. So as an exchange, we've had tremendous engagements and milestones that we've been able to engage, especially in the area of Islamic finance. We've had both local and international engagements that have led even to a lot of development, and we are still open to be able to see the furtherance and even development of the capital markets, especially when it comes to Islamic finance. Notably, I'd like to single out, we have an MOU with Nasdaq Dubai, which is a peer exchange in the United Arab Emirates, that we established so that we can be able to share information and experience, even to jointly develop products and also different Islamic capital market solutions that we can both work on. So even on the table, that NDA, that MOU is still open, and we are ready to be able to work with any player that would be able to front this. And maybe another area I'd like just to single out, I know more recently in the past month, we actually had one of our products, that is the Acon, which had gotten the clearance from the audit and advisory of Islamic financial institution based in Bahrain, that it is actually permissible to invest in the Acon REITs, the D-REIT and the I-REIT. So we have other products that as a market, we've actually, they're available even for our Muslim brothers to be able to invest. They're already halal, and you can be able to probably get to invest, but we are also open even for the co-creation of new ones. I know we've had past engagements and even different initiatives to be able to see how we can be able to grow the market together. So from a market point of view, we have the rules that are already in place that would be able to support, and also the systems or the technology that can be able to support some of these products. But we are also open for any further engagement, even with different stakeholders, to be able to make this to work. So today is not a day of long speeches, but just really to welcome also from the market point of view, just like Mr. Shamia has done, and to welcome all the distinguished parties that are going to be participating in today's session. So thank you very much. Allow me to hand back to Mr. Shamia. Thank you.
So thank you so much, Mr. David Wagema. And of course, we appreciate your comments. At this point, let me invite the chairman of the Board of Capital Markets Authority, Mr. Yugas Mohammed, to make his keynote speech, and then thereafter invite the PS Economic Planning to then give us, of course, the opening remarks for this particular forum. So over to you, Mr. Yugas.
Good morning. Thank you very much. Can you hear me?
Yes, we can hear you.
Okay. Thank you very much, Mr. Shamia. PS Muhati, board members of CMA and NCE, CDSC, and other represented institutions present. Chairpersons, CEOs, senior representatives of financial sector regulators, capital market intermediaries, and approved institutions, invited guests, esteemed participants, ladies and gentlemen, good morning, Assalamu alaikum. I'm indeed very glad to be part of this audience of esteemed stakeholders in the field of Islamic finance. I'm particularly glad that this forum comes in this important time in the holy month of Ramadan, and also in the Christian calendar, the Easter that that happened. Thank you so much for taking time off your busy schedule. We don't take that for granted. I'm sure you had a good rest for the Easter holidays, and thank you for accepting this invitation. It is important to us. Thank you. Among us today, the distinguished stakeholders, global Islamic scholars, local and global, consultants, advisors, seasoned financial experts, professionals in the banking sector, lawyers, political leaders, central bankers, academia, representative from Office of the Supreme Council of Kenya, the Qadi's Court, and other professionals. Bringing you together today, no doubt provides the diverse ingredients necessary to push today's agenda forward in a more structured and inclusive manner. I'm elated that you heeded our call. Distinguished participants, first I wish to thank everybody for being here, for this privilege to be able to create this strategic leadership to create wealth for Kenyans and Kenya through the capital markets. A couple of weeks ago, I had a meeting with the CS National Treasury and Economic Planning in the run-up to today's session. And as I briefed him on this upcoming event, I was pleasantly surprised at his keen interest in Islamic finance. I even learned that previous sovereign bond issues by the government have had a sukuk component. In short, ladies and gentlemen, I wish to communicate that the government views Islamic finance as an important asset class in deepening our capital markets, but enhancing access to financial services in Kenya. I see today's event as a refresher workshop with an aim of presenting you with an opportunity to appreciate the key concepts, evaluate the journey we've traveled thus far, and get a glimpse of the likely future of Kenya's capital markets while intensifying efforts to improve the growth and development of this budding industry in Kenya. Among us, there are several decades of competence, experience, and knowledge of this subject, and I wish to encourage you not to shy away for giving your valid contribution to this initiative. Ladies and gentlemen, this virtual workshop comes at a very opportune time, even as we as a country's capital market industry actively seek to mainstream this alternative mechanism for financing while positioning the country not just as an international financial center, but as a regional Islamic finance hub. Since its establishment in the 1970s, Islamic finance has developed significantly over the years, increasingly becoming a noticeable segment of the international financial system. As a matter of fact, as of 2021, the global Islamic finance services industry was estimated to be worth almost $3 trillion, implying a growth of 11% year-on-year in assets and in US dollar terms. It is worth noting too that similar to previous year's trends, the Islamic banking and Islamic capital market sector were the main contributors to the increase in total value of the global IFSI, with takaful contributions also registering a marginal improvement. It is worth noting that the key Islamic finance jurisdictions such as Malaysia and the GCC countries have made significant progress in adopting Islamic finance as a complementary form of financing to conventional finance. However, other jurisdictions in Africa such as South Africa, Nigeria, and Kenya also registering considerable progress in growth of this mechanism of financing. Bangladesh and Indonesia in the Asian region have also shown good potential for growth in the industry. In addition, European countries such as the UK and Germany have also registered marked progress activities in the industry. As regards to Africa, despite accounting for 15% of the world's Muslim population as of 2021, Islamic financing in Africa comprised of approximately only 2% of the global and less than 10% of the domestic total financial services assets in most of these African countries. Consequently, though still in its nascent Islamic finance stages, Kenya continues to work on several initiatives to drive the growth of Islamic finance domestically, with there being significant headroom for growth. Turning now to some of the achievements we've registered so far, ladies and gentlemen, I wish to start by noting that the Islamic finance industry in Kenya is still at nascent stage of development. Currently, the Islamic finance industry has 3 fully fledged Islamic banks, 5 Islamic windows of conventional banks, 1 fund, 1 takaful company, Islamic insurance company, 1 takaful window, and 1 re-takaful window. 2 Islamic circles have also been registered by the Commissioner for Cooperatives Development. Because we believe that much more can be done to grow this market, the country's Financial Sector Regulators Forum, comprising of CBK, CMA, SASTRA, RBA, and IRA, with technical and funding support from SDA, which is the Financial Sector Deepening Africa, has through the Project Management Office helped coordinate a range of interventions to enhance the development of the Islamic markets in Kenya. The PMO, which was housed by CMA and capacitated by the Islamic Finance Advisory and Assurance Services, an international consultancy firm specializing in Islamic finance, developed the initial set of standards in operational practice for Islamic finance in Kenya, with the ultimate objective of positioning Kenya as an important player in the regional and global services industry. Given the work done in the first phase, I'm happy to note that we have clarity on the understanding on the outstanding issues that need to be unlocked to support this industry, including addressing outstanding gaps in the legal and regulatory framework for an efficient and reliable Islamic finance infrastructure, formulation of a national policy and subsequent legal and regulatory framework to usher in efficient and reliable Islamic services infrastructure, continuous capacity building measures to provide an enabling environment for industry players to be competitive and innovative, harnessing the power of digitization and digital innovation to transform Islamic finance and Islamic in the capital markets. Moving forward, as a regulator, we're keen on collaborating with all stakeholders to support this form of financing to fulfill its mission for not only contributing to the stability of Kenya's financial sector, but also improving financial inclusion, which, while improving access to capital by undeserved populations in the process, boosting growth and improving opportunities. With this, ladies and gentlemen, I wish you a fruitful deliberations, and sorry for the long speech. I want to take the opportunity again to welcome everybody, and we are very much interested in this subject because progress has been made. There's a bit of stalling, and we want to make sure that we move it forward. And I want to thank you all for showing interest and coming on board. Thank you so much.
Thank you, Mr. Yugas, for those remarks. It is now my duty to invite our chief guest, who is the PS Economic Planning, Mr. James Muhati, to make his remarks. So, Bwana PS, welcome.
Thank you very much. The chairman of the board of directors of CMA, Mr. Ugas, Sheikh Mohammed, board members of the CMA, the Nairobi Stock Exchange, CDSC and other represented institutions, the CEO of the Nairobi Securities Exchange, Mr. Geoffrey Odundo, and his representative present, chairpersons, CEOs, and senior representatives of capital markets, intermediaries, and approved institutions, invited guests, esteemed participants, ladies and gentlemen, all protocols observed. I'm here to represent the Cabinet Secretary, National Treasury and Economic Planning, Professor Njuguna Ndung'u, in this forum panel today. So I'll be able to make these remarks on his behalf. I greet you all. It is indeed a great honor for me to have been invited to grace this auspicious occasion of exploring the distance that the country has covered so far in adopting Islamic finance as a viable complementary form of financing to the conventional system as we know it, even as we seek to devise a common future strategy. I'm happy to note that Kenya is considered to be among the 4 countries in the continent with considerable potential of becoming regional hubs of Islamic finance. This is because of factors such as the country's geographical location, sizable Muslim population, and infrastructure funding needs, which have created an ideal environment for this mechanism of financing to thrive. The National Treasury and Economic Planning has been an active partner in overseeing the process of facilitating the seamless adoption of Islamic finance in Kenya, not only through its evaluation and approval of the key relevant policy and regulatory instruments, but also through its active participation in industry-level strategic initiatives meant to enable Kenya to become a regional financial hub. A case in point is the current capital markets master plan. In addition, ladies and gentlemen, as the National Treasury, we are very supportive of the efforts to establish Nairobi as a regional financial hub. To this end, we shall actively support initiatives aimed at putting in place a facilitative environment for the country to be the focal point for regional capital flows, and key among them are funds from international partners that have prioritized this mode of financing as the preferable financing mechanism. In addition, our institutions have already established important links with the international Islamic finance partners, with CMA and CBK becoming members of the Islamic Financial Systems Board, that is the IFSB, and the Nairobi Securities Exchange signing an MOU with the National Association of Securities Dealers Automated Quotations in Dubai. Ladies and gentlemen, I wish to note that through efforts of stakeholders as guided by the National Treasury, Kenya has already taken bold steps towards preparing the ground for the efficient operation of Islamic finance in the country. To this end, we now have comprehensive amendments to the anchoring subsectoral law, namely the Capital Markets Act, the Insurance Act, the Retirement Benefits Act, the SACCOS Act, the Public Finance Management Act, and the Tax Acts, that is including the VAT and stamp duty, thus leveling the ground for equivalent treatment of both conventional and Islamic finance. On the particular issue of the SCAC issuance, the National Treasury, I am aware that the government had committed to issue the 3 Sharia compliant bonds over the 2018, 2019 to 2022, 2023 strategic plan period. As you may be aware, this has not been possible due to a number of factors. However, we shall be keenly observing the SCAC issuance landscape, and at an opportune time, an issuance shall be made. Turning now to what we see as the future of Islamic finance in Kenya, we plan to effect further necessary reforms as we strengthen footprint on impressing Islamic finance in Kenya. To this end, we plan to host the financial sector regulations to do a stock take of progress made so far and agree on a comprehensive way to conclude the outstanding matters. As I conclude, let me take this opportunity to thank you once again for making it to this virtual Islamic Capital Markets workshop, and wish you all a very fruitful deliberations. Thank you, God bless you, and God bless Kenya.
Thank you, PS James Mohati, for actually those remarks and sitting with us in this forum. I think it just assures us the support that the government is ready to extend to us as we look at Islamic finance within the financial sector. I really appreciate the comments you made, the plans the government has, and of course, looking forward, your contribution in ensuring there is the enabling legal frameworks in place. We thank you so much. And of course, we will again look at the points and see how do we extract what we need to do, and also liaise with yourselves and also the other policymakers so that we can ensure our objectives are fully met. At this point, I think I want to pass the program back to Justice Akoti so that we can go into the technical presentations this morning. Thank you, and Justice, please pick it from there.
Thank you very much, Mr. Shamia, for facilitating that phase of our session. We appreciate all that have participated in this session, including PS Planning, our chairman, the CEO, and the representative from NSC. Much appreciated. So just to ensure that we are running with the time, I want to welcome the first presenter, who is going to talk about concepts in Islamic finance and shed a bit of light on what is happening across the globe. And this is none other than Mr. Farouk Raza, who is a known consultant on Islamic finance issues. Mr. Raza, please take it up from here.
Thank you, Justice. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuhu. And a very good morning to all of you. It's a really great pleasure for me today, to be back with my Kenyan friends and colleagues and, the stakeholders after a long time. It's great to see. And I would like to thank the CMA, the National Treasury, and all the other stakeholders, and specifically the CMA team, to resurrect this project that we started a few years ago. And I believe that, has actually brought a lot of good things to Kenya and many more to come. So being mindful of time, as my colleague, David Wagema has said, that today is not a day of long speeches and presentations. So it's more of just, I think, bringing back the momentum and building it up again for the next steps, God willing. So I will just go straight into the presentation. So there are two parts. The presentation is very brief, by the way. So there will be a very brief introduction to Islamic finance, just as a reminder. And then there will be, a little bit of, references to the Islamic capital markets, with a specific, very small focus on sukuk, because that has been, one of the key points of discussion, in the previous phase of the project as well. And I think going forward as well, as Mr. Mohati from the National Treasury, he mentioned as well. So the key concept, or a very brief and simple definition of Islamic finance, what it is the provision of financial services in accordance with the principles and rules of Sharia. So Sharia, as you know, is the equivalent of Islamic law. So all the financial transactions that are conducted in accordance with the Sharia law are called Islamic finance. It's just simple as that. However, there are a number of differences, that we see because of the principles that Islamic finance is founded upon. So first of all, money does not have any intrinsic values. It's a medium of exchange. It's used to quantify and measure the value of other things, other objects, but not treated as a commodity itself. The economic value creation and social solidarity, they are very important from Islamic finance point of view. Then also having a participation in risk, and then of course profit and loss, not in all the transactions, but in most of the transactions is a very basic principle of Islamic finance. And the majority of the transactions, they will be always related to an asset. So it has an asset-based approach where there is an ownership of the asset that is transferring from one party to the other, instead of just moving money from point A to point B. Then also the very famous prohibition of riba or interest or usury. But besides that, there are other prohibitions as well. For example, gharar, ambiguity, or any uncertainty, or any form of speculation or gambling, or other practices like, for example, unjust enrichment or exploitation, any unlawful or any unethical trade or any business activity, or any form of corruption. So they are all prohibited, from Islamic point of view. We absolutely need a fairness, in all the transactions, all the contracts that are being done, creating equal opportunities for everyone, for the whole community, being very inclusive, and also ensuring a fair distribution of wealth. So, it's not about just making money, for a few. It's actually how we can make the whole population or the whole community, give them prosperity. How can we do that? So of course, I'm not talking about, equal distribution of wealth. I'm saying a fair distribution of wealth. Then in terms of sustainability, also, the environment and the sustainability of resources is very, very important from a Sharia point of view. And everything we do must be in full transparency, and there shall be accountability for that. So there is no room for any irresponsible, type of lending, if you want, that may lead potentially, to issues or to financial crisis, etc. So these are the basic principles. Now, very briefly touching upon, the Islamic finance contract. So unlike conventional finance, where the majority of the transactions are actually based on interest, it's either borrowing or lending, Islamic finance has a wide variety, a whole range of different contracts that are used for different types of transactions. And these transactions, they can be structured in so many different ways that actually Islamic finance becomes a very innovative and very different type of finance when you go into the depth of these structures. Unfortunately, I don't have the time to go into the details, but very briefly, I have put these on the screen for you. So there are exchange contracts that are used for the sale. Then there are partnership contracts, where there is participation required in the profit and loss. There can be also lease contracts where the asset is owned and then leased out, for a certain rent. There can be services provided and charged a fee for that. Of course, we can provide a loan, but that loan will be, free of any return. So it's going to be, we call it in Arabic as Qard Hasan, meaning it's a beautiful loan, or it's to help someone in need. It's actually not to make someone richer. It's it's a different kind of concept. So it doesn't allow charging anything, for extending this loan. It's not really a main product, for Islamic financial markets, if you want, but it's still, one of the contracts that is used. And then, of course, there are, other supporting contracts as well, like security and so on and so forth. So, this is the overview of the family of contracts that exist in Islamic finance that allow us to structure different types of products and services and so on. Now, when it comes to the key segments of the current market that we see, the Islamic finance total assets were actually around 3 billion in 2021. That's the latest industry report that we have. And as you can see on the screen, around 70% of the assets actually come from Islamic banking, and around 2% from Takaful or Islamic insurance. The rest you will see is almost 28%. That is actually coming from capital markets. So it can be Islamic funds, it can be sukuk, or other types of transactions as well, or instruments. So this is an overview of the market segmentation and its size. Now, when it comes to Islamic capital markets, there are different asset classes, or the segments that we have in the markets. So, for example, the first and probably the most common one is Islamic equity market. So this segment is including Sharia compliant equities or stocks of public traded companies that meet Sharia compliance criteria. So there is actually a screening methodology that is used to extract the stocks from any financial market, for example, Nairobi Securities Exchange, to see which companies are Sharia compliant, and then those equities are traded and in this Islamic equity market. Of course, certain types of activities such as alcohol or tobacco or gambling or non-halal food production, they will be excluded from this market, and this is part of the screening process. Then we also have Islamic debt market. So when I say debt, it's not really in the same meaning as debt. This is actually pointing towards the instruments like sukuk, usually referred as Islamic bonds, and Islamic syndicated finance. So sukuk, they may be issued in different forms based on debt, participative, or hybrid structure. So again, this is very different from the bonds, and we will have a little bit more of details in a few minutes. Then Islamic funds, so Sharia compliant mutual funds, exchange traded funds, and other collective investment schemes that invest in Sharia compliant financial instruments, and also Islamic real estate investment trust funds as well, or the Islamic REITs also. So these are the main asset classes. There is a new breed of asset classes coming as well, but I will talk about them in the end of the presentation. There are, of course, there is this industry is growing, and like any industry, we need some sort of standardization in the industry. So currently we have three bodies, IFSB, IOFI, and IIFM, that exist in the market as the industry standard setting bodies. So these bodies, they are guiding the industry by providing the standards to do different type of things. For example, IFSB is addressing more of prudential issues, IOFI Sharia compliance and Sharia governance and ethics and auditing, etc. And Islamic financial markets is providing template contracts for complex type of structures, for example Islamic hedging and so on and so forth. Then we also have some supporting or industry facilitation bodies, including IILM, this is the Liquidity Management Corporation, and also the Islamic Ratings Agency as well. Of course, all the big 3 or 4 of the ratings agencies, they also do ratings, of Sukuk and the Islamic banks and instruments as well. But this Islamic, IIRA is actually does only Islamic, financial instruments rating as well. Now, just a very quick and a very brief, overview of the performance of the key market segments of ICM. So as you can see, Islamic equity markets, they have actually outperformed, and I have taken an example of S&P Islamic Equity Index that over the period of 10 years from 2012 to 2022 has actually outperformed its conventional equivalent. So usually that's what we see. The majority of the, the world's leading exchanges now have their own Sharia indices like the FTSE or the Dow Jones, etc., and S&P and many more. And usually what we observe is that Islamic funds, they actually, or Islamic indices, they outperform the conventional ones. Also, as you can see here, the growth in assets under management and the number of Islamic funds is also continuously rising, throughout the world. And what we see here is the domiciliation of the funds. So here on the chart on the right hand side of the screen, you see that the majority of the funds are actually based in Saudi Arabia, Malaysia, but also in Jersey, in the UK, and also in Luxembourg, and besides many other countries as well. So this is interesting that there is 238 billion of asset under management across all these funds, and the growth is actually 34% year on year that has been observed recently. So this is a very burgeoning sector. And then we come to Sukuk. So again, as you see here, that the Sukuk have actually grown year on year basis. There was a little slump during 2015 and 16, but otherwise it's actually the issuance is growing, and this issuance is majority sovereign issuances, but there is a lot of market issuance as well. So we see this happening across the world, including many of the Western countries as well, where the UK, Germany, Luxembourg, Ireland, and many more have actually issued Sukuk, and the UK is actually issuing. I think they have issued their second or third Sukuk now, sovereign Sukuk. So it's a market that is actually attracting attraction from around the world. Currently, IFAS is working with the government of the Philippines, and being a predominantly Catholic country, again the authorities, just like Kenya, are very keen to establish a performing Islamic finance industry, and the government of Philippines, the Bureau of Treasury, is very close to issuing their first sovereign Sukuk from the Philippines as well. So here on the screen, you see the total issuances by domicile and also by type. So by type, as you can see, the majority of them are sovereign, but corporate is also very close. And then there is also a small amount of issuance also from multilateral organizations as well. For example, the IFC has issued quite a few Sukuk and many more as well. When it comes to the domiciliation of the Sukuk, you can see that the largest 3 players in this market are Saudi Arabia, Malaysia, and Indonesia. And of course, there are many other countries, including a number of West African countries as well, and South Africa, among many more, who have already issued Sukuk multiple times. And we believe that Kenya can be actually a very good home for not only the sovereign issuances, but also corporate issuances, not only from the not only from Kenya, but also from the region. So briefly, I'm going to touch upon the Sukuk, also referred to as Islamic bonds. So this Islamic securitization is based on the concept known as taskik in Arabic, and this is a process of dividing ownership of certain assets into the units of equal value and issuing securities as per their value. The IOFI definition of Sukuk is the certificates of equal value representing undivided shares in the ownership of tangible assets, usufructs and services, or in the ownership of the assets of particular projects or special investment activity. So as you can see that this Sukuk is quite different actually, because there is an asset always involved, serving as the foundation of the Sukuk. So there is always an underlying asset, and the profit, not interest, but the profit that is paid, that is calculated according to the performance of the underlying asset. Now, this is in theory. However, what happens in practice is actually the primary role of the asset is to act as a security, and pricing is based on credit worthiness, market conditions, and the benchmark rates. And Sukuk are typically traded in both the primary and secondary markets as well. So some of the Sukuk are tradable and others are not tradable. We cannot go into the details today, but yeah, it's having both, and they can be listed on primary, and they can be also traded on the secondary. So very briefly, I'm going to touch upon the similarities and differences between the Sukuk and bonds. So similarities, they are both investment instruments that are usually marketable, transferable, and tradable. They can be rated by regional international rating agencies, both of them, and they can be secured as well. Sukuk can be secured with a credit rating that may be enhanced by using Sharia compliant collateral or guarantees. And the variety of Sukuk structures allows for structuring Sukuk across different legal and fiscal domains to achieve the objective of the issuer. And Sukuk are subject to regulatory requirements just as the conventional bonds, and maybe a little bit more of regulation required due to the Sharia compliance and so on. In terms of differences, the Sukuk are issued under Sharia compliant contracts and structures. So of course, it will be quite different, and sometimes it can be more complex than a bond. Also, funds only Sharia compliant projects or assets or services or activities. So the proceeds of a Sukuk cannot be used for a non-Sharia compliant reason. So it has to be used for a Sharia compliant activity. The conventional bonds, they represent pure debt obligation, whereas Sukuk represent ownership stakes in the underlying assets. And they are secured by ownership rights in the underlying assets, while conventional bonds are generally unsecured debt. And Sukuk do not pay interest, but they pay profit or rent, depending on the underlying structure and the performance of the Sukuk assets. So the current trends, I said that there are, some new asset classes emerging as well. So, here are they. So there is actually a lot of, I think, trend in the world, to issue sustainability related Sukuk, and also we are seeing, these funds as well. So, for example, ESG-based Sukuk, or sustainability-related Sukuk, or green Sukuk, as we say. And Indonesia and Malaysia are the respective largest issuers of those green Sukuk. And I think I have seen also one green Sukuk issued somewhere from Africa as well. I can't remember where exactly, but green Sukuk is also becoming, very popular these days. So this is a new, asset class or a sub-asset class, if you want. Also, in capital markets, there is Islamic equity crowdfunding or P2P financing as well. So there are actually a number of digital platforms that are allowing, a large number of people or organizations to fund or to finance a specific business venture, or, fulfill any individual or societal needs through, the digital platform in accordance with the Sharia principle. So this is also, very up and coming these days. And then, of course, Islamic fintech, just like, the general fintech, there is also a lot of development in Islamic fintech market as well, where new technologies are emerging, and they are complementing the existing markets in terms of Islamic banking and capital markets as well. So in order to close the presentation, I would just like to briefly touch upon the challenges that we see in global Islamic capital markets. And this is very much actually the case in Kenya as well, as you will appreciate. I think we all know this, but for your peace of mind, Kenya is not the only country that is, facing these challenges, but they are actually sort of global. So there is a lack of standardization, which makes it, difficult for the investors, to compare products and so on and so forth. There is also limited liquidity in Islamic capital markets because it's still relatively limited and small. The markets are growing. There is limited investor base also because of the same reasons, the markets are limited and the knowledge is very limited, and that is, having a little impediment over, the investors to come and join. There is lack of enabling legal and regulatory frameworks as well. Kenya has done a lot of work, and I'm very proud and happy, that we have been part of that. But there is still, some way to go, and many other countries are unfortunately still behind, even, from compared to Kenya. So that's also, one of the big issues. And then there is also the perception of complexity. So, they are instruments are often perceived as more complex. And I do reckon that, some of the spook structures can be actually a lot more complex than, the bonds. But, it's very much doable. It's happening in, a number of countries on almost a daily basis. But of course, it hampers the growth of the market because the investors are sometimes deterred and they need a lot of education and handholding. That may be provided, that is available. And then, of course, the lack of awareness and the shortage of qualified talent in the market as well. So why, ICM or Islamic capital market is important for Kenya? Because it has potential opportunities to fund the infrastructure, energy, and PPP projects. It will help in financial market deepening, the diversification of sources of funding, mobilizing domestic savings, attracting foreign direct investment, promoting entrepreneurial culture, and enhancing access to finance. And all that to be, inclusive and create more opportunities for all Kenyans, to cement Kenya's position in Africa and in global financial markets, and to play an active role in the country's economic development and financial stability in order to achieve the national development goals. Asante sana. I'm happy to take any questions if you have.
Thank you very much, Bwana Raza, for that feedback you're giving. So at this point, if there are any reactions, comments, but before we get to reactions, I'm meant to understand that the Governor for Garissa County, Mr. Nadeem Jama, is with us. Welcome very much, Governor. And perhaps you can say hi for a minute before Mr. Farouk answers a few questions that will be asked from the audience. Governor, please.
Am I being heard?
Yes, we can hear. Governor, we can hear you. Just go ahead.
I think Governor's mic is off. Maybe you can put this.
You may have to put it on. Yeah, so as he prepares himself to give a word.
Yes.
He has unmuted, yeah. So Governor, please go ahead. You can say hi and
yes,
give some insights.
I was saying, I'm saying, of course, I'm joining from Garissa. I'm honored to be part of this very, very important program. And first of all, I would like to take this opportunity to congratulate my friend, Mr. Ogas, for this new role, and also the new team at the Treasury, Mr. Mohati, and for that matter, Professor Njuguna, also who is a friend of mine. My very, very few remarks are that there could not be a better time for Kenya to make progress in the world of Islamic capital markets. I have in the past, about 2 years ago or so, I had some good discussions with the Capital Markets Authority, including a number of presentations that we took together. I'm sure some of the team here who are part of this program will recall those meetings. And we did try to initiate some concrete steps, but of course, somehow would not make good progress. I think the time now is indeed the right time to restart, this wheel. And for me, particularly for two good reasons. Number one, we could not get a better team with Professor Njuguna at the helm of the Treasury now. I'm very, very confident and indeed quite excited, because this is a man who actually can easily be termed to be the patron of Islamic finance in Kenya. He's the man in whose hands the first two Islamic banks were licensed when he was the governor of the CBK. Of course, starting with First Community Bank, which was the first bank to be licensed. And that, of course, was promoted by myself. And actually, he is the man who gave me the title of the father of Islamic banking in Kenya. And therefore, with Professor Njuguna back to this arena, I'm quite excited because he's a man who is very, very keen and indeed quite, shall I say, committed, for lack of a better word, to this whole business. The other reason why I'm quite I'm excited and indeed feeling that this is the best time is because given our current financial circumstances, we've listened keenly to the presentation by Brother Raza. One of the areas that Islamic capital markets, particularly Sukuk, can really do a lot is in terms of off-balance sheet, or raising off-balance sheet financing, which we now badly need in our country, particularly given the burden on, hello?
Yeah, we can hear you.
Yeah, particularly given the current burden on our balance sheet as a country, and for that matter also the need by many corporates to raise funding, given the current market circumstances. And therefore, I think that the time is quite opportune. It's the best time to really have this debate or this discussion. And I'm honored that I'm part of this. And I think really we should start the ball running very quickly, so that we move fast and get Islamic capital markets, particularly the Sukuk, on the run. Asanteni sana.
Thanks, Your Excellency, for those wonderful remarks from Garissa all the way. We appreciate that you've been able to make it to this session. Also appreciating the fact that National Treasury is represented here and they're listening to every comment that is being made. I think it's important that National Treasury was represented here. Good. Now, so we can go to Farouk, perhaps for 1 minute. If you have any comments, reactions, the same. I can see Sheikh Ibrahim wants to say something. Sheikh, please go ahead. You can unmute and give one comment.
Yeah. Thank you very much. And assalamu alaikum wa rahmatullahi wa barakatuh. And I'm happy to see Raza. We last met in Bahrain, the last IOP meeting. And thank you for also making us part of this. I am the chairman of the CPF Salih Sharia Advisory Board. And one of the concerns that we have, Brother Farouk, in this country is the standardization. As you know, a country like Malaysia, which was one of the leading markets, at the level of the Bank Negara, there is a Sharia advisory board. So you find that the Sharia advisory committees advising the different institutions sort of have an umbrella body up there, which is lacking in Kenya. And as a practitioner, what we are facing now is that different Sharia boards advising specific institutions have different ways of interpretation. So we end up sometimes speaking at cross purposes. So you find certain things are allowed by a certain Sharia board, but not allowed by a different Sharia board advising another institution. Because each Sharia board sort of operates in a very loose way. So the only standardization that we refer to is the IOFI standardization. But at the level of the country, I feel very strongly that we need a body, an umbrella board, an umbrella Sharia advisory body at the level of the CBK. Then the other challenge, of course, which we are facing every day, the knowledge gap. There is a very big knowledge gap. And that's now it has now transformed into differences even among the religious scholars, because we don't lack scholars of Sharia in the country, but we lack Sharia scholars who also understand how the market operates. So when a Sharia scholar does not understand how even the bank operates, then they quickly declare that this is not Sharia compliant, and we end up having a big problem. So I don't know what other markets have done to overcome this kind of.
Thank you, Sheikh Ibrahim. Really appreciate. I think your 2 points that you have raised are extremely important. If you remember, may I remind the audience that in 2018, when we closed the PMO, or not closed, but when we handed over the PMO to the local stakeholder, to the financial sector regulators, at that point, I think the last of the things that we did was actually doing a proposal for instating Islamic, Kenya Islamic Finance Council, or Islamic Finance Council Kenya. And that was an equivalent of a national Sharia board. We, prepared the documentation and so on. Unfortunately, because things did not work later in the way they were supposed to be, and then we were later hit, by COVID and so on. So unfortunately, I think that is still, I would say somewhat unfinished. But that's something that can be easily resurrected, and it will be entirely up to the stakeholders. Our proposal and all the required documentation, including the structure, the terms and conditions, and the terms of reference and everything is there. We can revisit it, and it's something. It's a relatively low-hanging fruit. It can be easily instated. But this is a political decision that has to come from the stakeholders. And I'm sure that with this resurrection of the project, and under the leadership of CMA, and also under the patronage of the National Treasury, I think it's time again to have these things in place, and it's easily doable. The second issue is the knowledge gap, and unfortunately that's something that most of the countries are facing, and there is a simple answer to that, and that's capacity building. We did some capacity building during the 2016-18 period, and I think there is more required to that. Meanwhile, we have between 2018 and now, we have developed specific workshops and material for gearing up the Islamic scholars to give them the knowledge, not only for Islamic finance, but also the general finance, so that they become more aware and it becomes easier for them to understand the financial products and to educate their local communities. So we have done this. I refer to the Philippines and some other countries as well. We have already rolled out this capacity building program, and it has been very helpful. And I believe that a stint of the same type of program in Kenya will be very helpful, God willing, to resolve all these matters. These are genuine issues in most of the developing markets, but they are easily manageable as well. This is the good news. So I will hand it over to Justice now. We are mindful of the time because there is very limited time. Thank you, Justice.
Yes, thank you very much, Farouk, for that feedback. Well received. Before I proceed, you can perhaps briefly speak to a question that was put on the chat. I would like to ask, how can Sukuk bonds be used to facilitate PPP projects? I just want to know the steps of the process and the link from PPP project stage to issuance of Sukuk bond. I know it's a long process, but perhaps you can do it in a few words.
Yeah, it's going to be a tough one, to be honest, Justice. I think it's a very interesting topic, but it's complex as well, because yes, the simple answer is that yes, we can do PPP projects very easily. with sukuk. There are different structures that may be possible depending on the project itself, depending on what underlying assets we can use, and what the local jurisdiction allows actually to do. So it's very much doable. As I said, Islamic finance is much more flexible in order to respond to the actual needs of the real economy and the genuine financial needs. So this is the good news. The bad news is that unfortunately I don't have the time to explain this, because what you are asking requires probably maybe at least like 15 to 20 minutes of discussion, and we don't have that now. So maybe we can take it offline sometime, or we can organize a different seminar for for that specific purpose.
Great, thank you so much, and thank you for being sensitive to time. We are a few minutes beyond what we had put up as time for speakers, and thank you so much. But Farouk, the plenary will be having some reactions, so perhaps you can stay on until the end.
Yeah, sure.
So that we can answer any questions that will be coming through. So at this point, I just want to take you through a quick presentation on what we're able to do in terms of Islamic finance. We just put it together. As I do the same, perhaps it's to welcome all of you. I know participation has been very good so far. The feedback we are receiving is well received. So let me just try to put it up for a moment. So I try the same. Viola, if you're able to, from your end, facing one of the challenges, putting it up, if you can do it faster than me, then the better. So thank you so much. Maybe you can put it full screen so then we can continue. So I'll just take you very briefly through what we've been able to do and go through as a country in terms of the milestones, the achievements, and the challenges that we have faced as a country. And the next slide, just to talk about, why is Islamic finance important to our country as Kenya? Just as in terms of type of content, as you can see there, just a brief introduction, a bit of coverage on Islamic finance in the country and the milestones we've covered, our achievements so far, market challenges, what are the pending activities, what are we seeking as CMA, perhaps from our patron and the National Treasury, some touch on the outlook, and perhaps some Q&A if time allows. Now, so in terms of the introduction, Islamic finance, as you may be aware, is playing a very active role in our country development. We already have about 3 Islamic banks, a number of other players. There is some increase in terms of financial inclusivity, which is something we can be proud of, but it ultimately contributes to economic development. Islamic finance in the country is capable of also increasing the level of financial inclusion. You realize that, and there was a coverage of the same by our chairman, talking about the percentage of population that is uptaking our financial sector products. It also helps to improve a deepening of our market. Ultimately, once it has fully been absorbed in our market, there is that potential that it could contribute to our deep markets or deepening our market. Now, in terms of foreign direct investment, I think I don't have to overemphasize that, because we realize there is focus on a number of capital inflows from out there. There has been a challenge of US dollars across the world, Kenya included, and Islamic finance could act as one of the ways in which we could improve our reserves of foreign currency, specifically US dollars. Of course, there's the aspect of building cooperation and partnership with countries that have made some significant progress insofar as this form of financing is concerned. And here we are talking about the Gulf Cooperation countries, Bahrain and a few others like Saudi Arabia are party to the same. And also, finally, positioning the country to play an active role in terms of Islamic finance. We already talked about making this country a hub for Islamic finance because it has a competitive advantage. And that is very clearly outlined in our Vision 2030. Great. So in the next slide, so you can see that in terms of current status, just a highlight of some of the players we have in the market: 3 banks, 5 Sharia windows of conventional banks, 1 Takaful company, and all that. Of course, there is minimal regulation despite the amendment that we had made to the anchoring law across the financial sector. Importantly, to also look at is the fact that we don't have screened investor stocks. Of course, the NSE in their presentation indicated that there is some progress that has been made so far in terms of Sharia pronouncements on ECON, REIT. But again, a lot more potential in that space. Also, we don't have sukuk issuance, and that is one of the biggest challenges. We've had a number of countries that we thought we were ahead of, including Tanzania has actually gone ahead and issued, about 2, I think, which is a challenge to us. Yeah, and then there is the market experiencing some risk exposure through 1-year failure. I think that is within the circles. Various challenges here and there because of the status of the economy, not only in Kenya but across, not only Africa but across the globe, and Kenya is no exception. So far so good. And the policy documents that we are leaning on in order to push this agenda of Islamic finance forward would be the Vision 2030, which is very clearly outlining Kenya becoming a middle-income country by 2030. The master plan of CMA, which very clearly outlines the fact that Islamic finance is a key focus area to position the country to take advantage of inflows of foreign currency. Then, of course, there is the Nairobi International Financial Center, and all that goes into it is already established. Of course, there are a few things that need to be done then to have all these operationalized. Then, of course, there is the newest kid on the block, bottom-up economic transformation and model, which the current government is very actively pushing for. Yeah, so in terms of our milestones, you can see there, we started off in 2015-16, very active collaboration between financial sector regulators to push the agenda of Islamic finance. 2015, we have Treasury supporting us in this effort. Same time, 2015, we had PMO being put in place, and I think Farouk has highlighted a few aspects of the same. Farouk's company was the lead in this process. 2016, October, as you can see there, some engagements in terms of coordinating PMO activities. And so ultimately, we did some studies in 2 stages. The first stage was, elements around, so what do we need to do in order to customize Islamic finance in Kenya, recognizing Islamic finance as one of the mode of financing in Kenya. And you can see all that was done at that time. There was a second stage, and we were able to change acts of the financial sector in order to enable enable Islamic finance to be able to operate in the country. 2016, as you can see, in October, we had key committees launched, the IFSC and IFCC, just to ensure that we have a structured approach to the same framework to support Islamic finance in Kenya. And the third stage has been ultimately trying to put together all this in one basket so then we can have a comprehensive national policy on Islamic finance. And that is pending, and it is one of the areas we are looking forward to engaging with key stakeholders, including the National Treasury, to ensure that it sees the light of day. This other slide is around what we've been able to do in terms of capacity building across from 2017 to 2018. We will be able to share this presentation so that you can look at what has been done. In terms of the achievements so far, I alluded to the fact that we had one key achievement around amending key financial sector regulations in order to be able to recognize Islamic finance, so that the treatment of Islamic finance products and services is at par with conventional products. The next slide, I would talk about the challenges that have been faced so far, and Mr. Raza talked about across the globe, what are the issues, what are the challenges. And as you can see there, one of them is regulation. And regulation is the anchor. Once you have regulation in place, the rest is able to fall into place. We, as I said, we need to have some underpinning policy framework, which then would give birth to frameworks. At this stage, what we have is a high-level amendment, which is significant progress, because not many countries in Africa have been able to do this. Then, of course, there is the aspect of technical capacity, which has been already touched on by a number of those who have already spoken. It is one of those lingering challenges that will continue to be around even as we push the agenda of creating more awareness. Yeah, so technical capacity and awareness are very much interconnected. Challenge being one, if you check out on capacity, technical capacity, there is an issue of IT systems, product development, Sharia audit. All those are technical issues that require redress, perhaps also through the national policy document, and also just ensuring that human capital is also looked at in terms of ensuring that we have sufficient number of scholars who can provide support, and we have continuous training of this, so then they're up to date on what is happening across the globe. The other challenges on process, as you can see there, now Islamic finance and Islamic capital products require one, technical knowledge that is fairly deep. Two, there's some time taken in terms of first appreciating the same, and then the process itself of ensuring that there is compliance, at every stage of issuance of these products. There's also the key challenge of perception. As you may be aware, we have had a conversation around, so should we call it Islamic finance, participatory finance, non-interest finance, like they are doing in some countries, just to be sensitive to other segments of the society that may be keen on, this form of financing without having to struggle with, the vocabulary. Then, of course, there's the costs aspect. When you're deciding the contract, when you're bringing in institutions that will be doing audits, all this would have to go into the costing. And it's not necessarily the case that issuing Sukuk is less costly than issuing a conventional bond. I think it's a question of what is the ultimate objective, given the principles that were covered by Mr. Farouk. Arbitrage is the other challenge, where people take advantage of the situations in different markets or market conditions, and then ultimately try to make some gain out of the same. It's a challenge not only in Islamic finance, but also even in conventional finance. So what are some of the pending activities that we have within Kenya? Of course, I have highlighted the fact that we need to have a comprehensive policy framework in addition to some of the progress we've been able to make. Discussions on the Sharia governance model that has already been touched on, having different interpretations across the financial institutions in Kenya How that is going to be done is the detail that we will need to work on. Capacity building, very, very key. Establishment of the legal framework for sukuk issuance, also very important. Framework for SPVs, very related to point 4 of the framework, and also, development of Islamic liquidity management instruments, just to take care of those who profess the principles that inform this form of financing. Great. So next, I want to talk about, maybe you can go to the next slide, what we are seeking. One is, of course, what we are trying to do here, Farouk refers it to resurrecting this form of financing in Kenya after some lull. Hopefully we'll be, now that we have National Treasury represented here, be able to smoothen some of those challenges so that we can take off from the ground. The other point is, you as stakeholders, starting to feel like you own all this, and therefore you need to be at the forefront to push the agenda for the same, so that regulators, are not left alone trying to push for the same. That requires concerted efforts, of course, as regulators. Ours is to provide facilitation and support in whichever way possible, and all will okay. Now, in terms of outlook, it's our understanding and a strong belief that the future of Islamic finance in Kenya, more generally, and Islamic capital markets is bright. It just requires us to keep knocking that door to ensure that, one, there's a full understanding of exactly what it's about, and then number two, appreciation of the instruments that are in there and why they are structured the way they are structured. Then the second point around outlook is more collaboration across stakeholders in the industry, because we need to be, pushing the same agenda across the board, so that then we ensure we're able to make some progress. I think that is all in terms of the presentation from my end. And because we are lacking in time, I would want to progress to the next step, and we'll be having a session for Q&A facilitated by my colleague Mwenda. So I'll just go next to the next speaker, and we'll have Mr. Abdallah Abdulhalik from Gulf African Bank giving us some presentation on how the market is doing and what their feeling is now that they are market there. Abdallah, welcome, and I hope I've not rushed for too fast. I'm trying to be sensitive to time. Welcome, and the floor is yours.
Thank you. Thank you very much. And assalamu alaikum. Good morning. Yeah, distinguished guests, ladies and gentlemen, on behalf of Gulf African Bank, first I'd like to take this opportunity to thank CMA for giving us this opportunity to participate in this forum. As my previous colleagues and speakers mentioned, it couldn't have come at a better time. In fact, most of the things that are in my presentation have already been mentioned. So in the interest of time, I will skip quite a number of slides so that we can save on time. But before we do that, I'd like to do a brief introduction here. First of all, on Islamic or Sharia or compliant finance. You see, Sharia is derived from two main sources. One is the Quran, which is the direct word of God, and two is the Hadith. Thousands of sayings and practices attributed to the Prophet Muhammad, peace be upon him. So these are the main reference points of Sharia. We cannot deviate from those. The secondary sources of Sharia are what we call Qiyas, which is the concept of analogical reasoning, and Ijma, which is the consensus. The concept of qiyas and ijma are used to legislate in the absence of rulings from the Quran or the Sunnah. So let's keep that in mind, that Sharia or Islamic banking is based on these things, that we cannot deviate too far from them if they are clearly mentioned there. Now, in Kenya, as also the PS said earlier, that we do have an opportunity to become a regional hub for Islamic banking. And if we do not grab that opportunity that we have today, we might lose it to the neighboring countries. We are ahead, but they are closing it. So we need to act quickly, because I know we have had similar discussions in the past, but there was no follow through of those discussions. Some of the colleagues who are here have participated in those discussions in the past. One thing that needs to also be looked at is the issue of Sharia boards within the 3 fully fledged banks and the 5 windows that we have a common approach to the introduction of these instruments, so that we do not confuse the investors out there. And therefore, Capital Markets Authority can play a role in bringing us together with a Sharia board that will be representing these other institutions, for us to have one common approach, voice, and goal, so that we can make this successful. 2, the participants, the financial institutions, also need to come up with a plan of providing a secondary market of sukuks, so that people don't feel that when they are investing in this, they are stuck for the period to maturity, like whether it's 5 years or 10 years or whatever it is, that in case of need, they can trade it, and there will be players in the market. So the financial institutions should be there to support a secondary market at a price, of course, but they should be there. Our discussion today is mainly on sukuk, but capital market products are many. We talked about the sukuk market, equity market, hedging market. So they are all there. So, but these are all can be done progressively. Right now, this market is ripe for sukuk. There is a sizable Muslim community in Kenya. There is a sizable investment from the community and others. And as I keep saying, you know, whenever we introduce products like this, we are not selling faith, we are selling a concept. And people need to look at it and say, okay, this sounds like a better way to invest. So it needs the buy-in of everyone or every stakeholder that we have out there. Hannah, let's move quickly to the slides. I would really like to go to the slide of KCB because all these have already been mentioned. The KCB Sukuk in Tanzania, to see how our neighbors and but yeah, here is one good example I wanted to give about the success. And also let me mention, Sukuk has become an off-the-shelf product now, and we do have experts in this country. His Excellency Nadif Jama wrote a book about Sukuk, so you cannot get it can't be better than that. This gentleman is an authority in this. We can always refer, and I know his passion about Islamic banking. He started a bank, and today he is a governor, but he's here with us today. And I believe he can play a major role in this. Sheikh Ibrahim also is an authority in his own right on Islamic matters. So we do have local expertise that can take this to the next level. Tanzania has already issued, I think, 2 sukuks. The last one being from KCB Tanzania. And it's already trading in the Dar es Salaam Stock Exchange. This issuance was oversubscribed by more than 10%. So it shows you the interest that it has gained within the local market. We should be able to do the same. Internationally, no sukuk has been undersubscribed internationally. And when I said that sukuks are now off-the-shelf products, because they have been done by almost 10 to 12 countries that I can think of, and successfully so. Now, when it comes to Kenya, people, first of all, within CMA, within the Central Bank of Kenya, within Treasury, and I'm glad to see that they are all represented here, that they need to accept that there are certain things that have to be done differently, but these things have already been done out there. Now, one thing that is important that we need to look at is the regulatory and legal framework of this document. Not only about this document, but also about the Islamic banking in general in Kenya for it to be successful. I can give you one good example. Is today, if there is a commercial dispute between a financial institution and a client, and it goes to court, we are not even sure which laws will take precedence in that court. If the transaction was done based on Sharia laws, or is it the laws of the land that will take precedence there, which can be totally different. So these are the things that need to be sorted out. We need to have this as part of the Banking Act, so it's very clear. And many countries have now included that in the Banking Act. Then there will be very, very clear way forward on how it can be done. Go to the next one, please. Okay, certain things that need to be taken into consideration when we do this. Issues of taxation, for example. Usually, the way it will be done, if we are to go ahead with sukuk, there will be assets behind the product, and therefore they may attract higher taxation and make it not very competitive compared to conventional bonds. Those needs to be looked at so that we can be at par. Okay. The issue I mentioned also the issue of unanimity of Sharia boards that needs to be adapted for the structure so that we have a common approach. And this is very important because the signals we'll be sending to our customers and investors out there will have no issues of divergence in terms of how we are looking at it. Next one. Okay. The issue of equities and indexes, we said that here the focus today is but this subject is very wide. We can adapt Sharia. We can even come with an index. S&P has come with an Islamic index. It was mentioned earlier by Sheikh Farouk on Islam. We can develop our own here and attract those kind of investments for the Muslim community that will conform with their faith. So the opportunities are immense. And I strongly believe that this is the time that we need to move. The only thing that I will urge here today, before we close this, is that we have to have a way forward. For the first time, we have been engaged by the Central Bank of Kenya to come up with a paper for sukuk introduction in this market. For the first time, we have approached them before To be fair to the Central Bank of Kenya, every product that we have offered, even though it was not part or in the Banking Act, they have never declined anything. They have supported us fully from the beginning, from when we started doing tawarruks, from when we launched Sharia compliant mobile money, Sharia compliant credit card that we have also issued. Everything was supported and approved, but it was on case by case basis. If these things are incorporated in the Act, we will now be launching these products faster, and we will have a level playing field with other banks, and also serving this society in a better way. Okay. So I don't want to take so much time. I wanted to save on time based on what my other colleagues have said. I will also stop at this point. I will also invite questions if there are any. I will want to ask or to participate in this to make it more meaningful, to participate actively and agree on the way forward from here. I think within, as I said, Sukuks are off-the-shelf products now, having successfully been launched elsewhere. It shouldn't take us even more than a month or two to launch one in this local market. Thank you very much.
Thank you so much, Abdallah, for that feedback. I think the key point I'm taking away is that we have to come out with a way forward, which is why we're here. I hope that there will be a concrete way on how we move from now on. So at this point, I want to welcome Mr. Anur to talk about ratings. What is the journey? How are things looking? Anur, take it up so that we are able to stick within time. Welcome.
Thank you very much. I'm waiting for the presentation to be uploaded.
So as it comes up, I hope West Africa is okay.
Yes, well, let me introduce myself first, and well, thank you very much. Do I have the authorization to move the slides? Maybe not. So I will ask the moderator to move the slides.
Yeah, it's okay. The moderator can go ahead and.
Okay, my name is Anwar Hassoun, and I am the Managing Director of the West African subsidiary of GCR, the leading rating agency in Africa. What I thought is to get a little bit more technical than usual. Usually we talk about principles, we talk about products, we talk about contracts, and maybe I thought that the audience might be interested in getting to know two things. First, how Islamic financial institutions and how Sukuk do work in practice, and the way we rate them, the way we identify the risks attached and embedded into them. So the objective of this presentation, which will be very short, and I won't be able to take any further questions because I will need to rush to another meeting, is really twofold. What really makes Islamic finance different in practice, operationally, and not just in theory? And second, what do we get from our observance of what's going on throughout the continent in terms of Islamic finance? As you probably know, we have 5 regional offices across the continent, and especially in South Africa, Kenya, Nigeria, West Africa, and Mauritius. And from our perspective, we have this opportunity that is quite unique to look at what things and how things go on from a micro economic perspective. So with no further ado, let me show you with some graphs how and why Islamic banks are different from conventional banks, and then we'll go to insurance companies, careful, and then we'll dig into the Sukuk, differentiating between 2 broad categories of Sukuk that are said to be asset-backed, as opposed to Sukuk that are said asset-based. Well, look at the banks first. What is shown here in the black boxes are the components of an Islamic balance sheet that are similar to conventional. So basically, Islamic banks do take current accounts under the form of wadi'a or qard hasan. They take term deposits, but they also take a form of deposit that is not known to conventional banks. These are profit-sharing investment accounts. Imagine a depositor that puts savings into a bank and then doesn't know whatsoever the sort of returns he or she might get out of those deposits. Those deposits provide a remuneration that is a function of the performance of the bank. So technically, a depositor into profit-sharing investment accounts, or PSIAs, as we call them in our industry, these deposits are technically some sorts of quasi-equity, right? And then Islamic banks do issue not so much bonds. They don't have the right to issue bond, they issue sukuk. But in order to manage the performance of profit-sharing investment accounts, Islamic banks tend to capture on the liability side of their balance sheet what they call profit equalization reserves. Why? Because banking, as any other economic or social or human activity, is cyclical. So in good days, profit-sharing investment accounts might remunerate depositors higher than conventional interest rates. But in bad days, these returns might be lower. And therefore, as a security, as a prudent reserving policy, banks tend to capture profit equalization reserves. But bear with me, profit equalization reserves do not belong to depositors nominally and individually. They belong to depositors collectively. So it's a form of embedded insurance within the balance sheet of Islamic banks. Then the question becomes, from a regulatory perspective, are profit equalization reserves capital, i.e. equity, or are they not? Well, legally they are not, because they belong to depositors. But from a regulatory perspective and a prudential perspective, profit equalization reserves do absorb losses. Profit equalization reserves tend to grow with the balance sheet, and they are risk management tools. Therefore, it might be very well that these profit equalization reserves, or PERs, be re-included in shareholders' funds as prudential equity. That's what the IFSB says, with some adjustments called alpha, but we're not getting into too much detail in this. On the asset side, well, typically Islamic banks do place funds with other Islamic banks or Islamic windows. They invest into Sharia compliant asset classes, especially in sukuk. And in terms of financing, they are obliged to use Sharia compliant contracts, the terms that you know, murabaha, ijara, istisna, musawama, and so on and so forth. So as you can see, an Islamic bank is a bank. They do intermediation. Economically, there is no major difference between Islamic bank and a conventional bank. But look at this. This slide is super interesting. The one before, please. The returns on those deposits, as you can see, tend to be quite cyclical. And therefore, Islamic banks have an element of risk. And this is called displaced commercial risk. This is the risk when the cycle is positive of getting more customers than conventional ones because the returns are attractive. But when the market goes into a downturn and the returns on deposits are not that attractive, there is a risk of a bank run. And therefore, what Islamic banks tend to do is to smoothen the cycle with reserves. This is totally unknown to conventional banks. Well, on the next slide, you will see, based on this, what we have learned from 25 years or more, looking at conventional and Islamic banks alike. Well, typically, from a methodology perspective, we use exactly the same methodology because, as my mentor used to say, Sheikh Nizam Yaqoubi in Bahrain, risk has no religion. At the end of the day, you are, as an Islamic banker, managing flows of funds, transformation risk. But in practice, what we see is twofold. On the positive side, Islamic banks tend to be quite profitable. Why? Because most of the customers who are depositing in current accounts are massive in terms of numbers. They do not ask for any return, and therefore the cost of fund is usually lower than conventional. The reason behind all this is that Islamic banks tend to be retail banks. They speak to people. They don't speak to institutions. Sometimes corporate customers are attracted by the value proposition of Islamic financial institutions, but usually we're talking to individuals. And individuals tend to be happy with current accounts. They typically do not ask for returns. Islamic banks tend to be very well capitalized. The loyalty of customers is very high. And Sharia compliance provides a natural means of differentiation. You know that banks are fighting very hard to acquire customers. Being a Sharia bank gives you that means of differentiation. And finally, asset backing, the fact that each and every transaction in Islamic finance needs to be asset backed, provides natural collateralization of assets. This is on the positive end. On the negative end, Sharia non-compliance risk is an additional risk that is unknown to conventional. The worst thing that can happen to an Islamic bank is not to lose money for a couple of years, is to become non-Sharia compliant. In that particular perspective, customers tend to shy away from the bank and never return back to it. It's not theoretical. It happened in Turkey in the beginning of the decade 2000. Reputation risk is at stake here. Displaced commercial risk attached to the profit-sharing investment account is also very difficult to manage, and liquidity is an issue. It's always an issue. Well, in the Q&A session, which we responded to a certain extent, we saw comments with reference to the fact that Islamic banks do not have enough assets to invest in. When in a market you don't have enough domestic sukuk, Islamic banks do struggle. It was the case in Morocco for 3 years in a row before the government issued sukuk for Islamic banks. So liquidity is extremely difficult. So ultimately, given the positives and the negatives, how do Islamic banks cope in terms of ratings? Some of them have a higher rating, some of them have a lower one. Now, takaful, look at this. Takaful companies, as opposed to conventional insurance companies, are materially different, completely different. In fact, takaful is two things. One is the takaful fund that is funded by the contribution of the insured people. And separately from the takaful fund, there is a takaful operator, that is the company itself. The takaful operator manages the takaful fund on behalf of the insured people. This insurance is by definition mutual. So what does the takaful operator? The takaful operator uses the shareholders' equity funds plus the takaful fund and then invests into asset classes, just like the banks, into money market, Sharia compliant, of course, fixed income portfolio, sukuk, and alternative assets like real estate, for example. And then what is extracted from that balance sheet is two things. The net financial return, which is the return on the assets co-invested by the operator in the fund, and the technical return, that is the difference between the contribution and, well, all the incidents, the sinistrality, right? If there is a profit, then the profit is shared between the takaful operator and the takaful fund according to two contracts, wakala contract and mudaraba contract. The first one being an agency contract and the second one being a profit sharing contract. So you can see there that the insured individuals or companies or institutions get cash back. This is unknown to conventional insurance companies. So from a rating perspective on the next slide, what do we see and how do we approach this? Well, technically and legally, the insurance company in the Islamic space is only the takaful operator. But from a rating methodology, what we do is that we consolidate the takaful operator and the takaful fund as if economically it was one single entity. So you see, it doesn't really matter if here you have two institutions separated by contracts. We, from an economic perspective, reconsolidate the two bodies into one. So what do we see in the pluses and minuses in terms of ratings? We see natural differentiation just like banks. We see limited competition. We see lofty premiums because typically takaful companies tend to be smaller and therefore they tend to be quite expensive. Cashback is an appealing marketing tool, and capital is like just like banks, quite ample too. Customers tend to be loyal, but on the downside, size is often a constraint. Reputation risk and Sharia non-compliance, just like banks, is a difficulty. And life insurance is usually very challenging because of the lack of the underlying assets. And assets in general are scarce and even scarcer than for banks. And at the end of the day, the ratings on takaful tend to be lower than the conventional insurance companies because of that particular issue of size. When in the future we will be seeing larger takaful companies, then ratings might go higher. Now, sukuk. Well, we spoke about sukuk since quite some time this morning, talking about the opportunities of issuing sukuk. What are sukuk? Well, usually you have to keep in mind that sukuk are always securitization transactions. It's always structured finance. In order to issue sukuk, you need to have a special purpose vehicle established on behalf of the originator, no matter if this originator is a government, the state of Kenya, or a bank, or a company, or whatever. You need to segregate the originator from the SPV. And typically when we say Senegal issued sukuk, that's not true. Senegal has established an SPV that is the issuer of sukuk. Senegal, the Republic of Senegal, in this particular perspective, is only the originator. So what does the originator? The originator carves out a series of rights. It can be an ownership right or a usufruct right. And these rights are sold and transferred to the SPV. With what? The SPV has nothing. It is a special purpose vehicle, doesn't have equity, doesn't have staff, it doesn't have anything. So where does it get the money from? It gets the money from issuing sukuk. And this money transits through the SPV to the originator as seller. And then the originator can provide the guarantee if it wants. In this case, we say that asset-based sukuk are being issued. Guaranteed sukuk are asset-based. Non-guaranteed sukuk will depend on the underlying assets, and therefore we call them asset-backed. So on the next slide, let us compare the two broad categories of sukuk, asset-based versus asset-backed. These are absolutely not the same animals. Asset-based sukuk, the underlying assets are sold to the SPV temporarily, not in permanence. Asset stripping goes along. What does it mean? It means that the obligor, the originator, segregates between the usufructs and the legal ownership. The legal ownership never gets out of the originator. Only the usufruct is. Is there asset buyback at maturity? Yes. Can we buy them back at nominal value? The answer is yes. The obligor does provide the guarantee. The securitization techniques are synthetic. The degree of structuring is low and amortization goes on. Residual value of the asset is strictly superior to zero. Investor risk is on the obligor, not the assets. And therefore, you might ask, how do we rate them? Well, typically, under asset-based sukuk guaranteed by the obligor, well, you name it. The investor takes the risk of the obligor, not the asset. The asset is there to make the transaction Sharia compliant, but it's absolutely not the same case for asset-backed sukuk. For asset-backed sukuk, the underlying assets are permanently sold. There is no guarantee of the obligor, and the buyback of the underlying asset doesn't occur, which means that the residual value of the asset is nil. And therefore, from a rating perspective, how do we rate them? Well, typically this is structured finance in the full sense of the term. And therefore, the risk taken by the investor is on the asset. So what we do is we use securitization transaction methodology in order to capture the expected loss of the underlying asset, that is the expected loss from an investor perspective. Here, the investor is actually buying the assets. Let me finish in 2 minutes. On the other section of this presentation is going to go quick, only 3 slides. What's going on in Africa? Well, typically the size of African Islamic finance is, as we speak, end of 2021, $65 billion. This is 2.1% of the entire market. And this map is showing you in orange what is at the stage of a project, and in green what has actually occurred. The little circles there are sukuk issuances. The other form is the banking side of things. And as you can see, 10 years ago, even less, this map was orange, was full of orange, projects. Today, we're talking about actual things going on. Islamic banks in almost all countries where Muslim population is important, and more importantly, sukuk everywhere. On the next slide, and I have been in touch with the Islamic Development Bank for almost 20 years in my various capacities, and Islamic Development Bank is saying and is stating that Africa is its absolute priority. Why? 500 million Muslims in Africa today, 1 billion Muslims in 2050, with a growing GDP per capita that is doubling every 5 years. So imagine in 25 years from now, Islamic finance in Africa will not be 65 billion. You can multiply this many folds. So to finish with, let's get to the last 2 slides of this presentation. What are the heavy trends? Well, as we said, there is a massive involvement of the Islamic Development Bank on all fronts, and especially promoting sukuk issuances in local currency for domestic markets. The promotion of Islamic microfinance. You know that the rate of bankable population in the continent is in the range of 20%. And therefore, there is a broad and large majority of customers who do not have access to Islamic finance. They have access to Islamic microfinance. This occurred in Ivory Coast, but also in Senegal, in Burkina Faso, in Morocco, in Egypt, and you name it. But in addition to that, we see Islamic finance in Africa being more and more innovative, thanks to what? Digital banking and microfinance. And in addition to that, infrastructure finance is picking up. And finally, Islamic smart assets. We have been seeing a dozen cryptocurrencies going on in Africa. For the moment, none is Sharia compliant, but it's just a matter of time before we see the first Islamic smart sukuk being issued, and this will be an Islamic cryptocurrency. So with that, the presentation ends. I'm very sorry I have to rush, but if you have any question or remarks, please feel free to reach the CMA, and the CMA will channel this information to us as GCR. Thanks very much for your attention. I'm leaving now, and I wish you all the best.
Thank you so much, Anur, for that presentation. And we promise that if questions come through, we'll share them so that you can be able to provide answers. But we really appreciate your time, and you are free to leave so then you can attend to the other activities that you have already indicated. So at this point, I would want us to go straight to the panel discussion. Forgive me for rushing again because we have to beat the time. Joseph Mwenda will be taking us through this session. Joseph, I hope you are online. Please put on your video and go ahead and facilitate this session.
Thank you, Justice, and thank you again to our very able presenters. Just following the Q&A, just want to thank the panelists for being very active in answering the typed questions. I am not seeing any open questions at the moment. So I would like to invite participants kindly, if you have any questions at this time, take this opportunity. We'll have about 10 minutes to do so that they can be answered. Feel free to begin.
Remember, we can cut it to 5 minutes, please, just to beat the time, perhaps.
Okay, no problem, MC. I invite any questions on the floor now. Just raise your hand. Or feel free to type them also in the Q&A.
Yeah, Dr. Bashir is online. Mwenda, maybe you can.
All right, go ahead.
Oh, thank you. Hello, can I be heard?
Yes, we can hear you.
Oh, great, thank you. It's an excellent session, excellent presentations. I enjoyed listening to all the presentation, really great value in areas around banking, but as well as the Sukuk, and the last presentation was really great. 15 years, I think, since Gulf African Bank and First Community were licensed. In 2015, the president then signed the 10-year capital market master plan. I'm not sure if it was 15 or 16. Governor Nadif, myself, we served on the committee that helped develop it. But I feel that despite such a long time and the fact that the sectors developed and the regulators were kind and looked away in many instances, I feel that the regulatory regime really fundamentally hasn't shifted in Kenya. And that has been part of the problem that raises some of the questions that Sheikh Ibrahim Letome raised about the lack of an umbrella Sharia board, which really undermines the growth of the Islamic finance sector. So I'll have wished to ask what will be different this time. Hopefully we're not having a very nice, excellent presentations, and then a few years pass before we see that we're still at the same place. I don't know, it's not a question, it's just a comment. Thank you.
Thank you so much for that observation. I can see an open question in the chat by the CMA chairman, and anyone is free to comment on this. And the question is, it's good to see SACCOs have introduced Sharia compliant loans, and how are those structured? Any of our panelists can give some insights into this. Thank you.
Hello, I wish also to.
Please go ahead.
Yes, I wish to. My name is Jafar Abdul Qadir. Just wanted to also make a few comments. One is just to echo what Dr. Bashir and Sheikh Letome had earlier mentioned. A decade and a half after Islamic finance practice was introduced in this country, we are still at the position where we are to define what Islamic finance is and what Islamic finance is not. So this clearly indicates that there is need for comprehensive Islamic finance literacy initiatives to be put in place. I know all the players, that is the institutions in the Islamic finance space, have in their own ways tried to carry out consumer literacy programs or awareness creation initiative. But what is needed is now a shared platform where the impact of their efforts and interventions can be felt on a larger scale. And then help also consolidate the gains that has so far been made and then scale up. That's one. Number two is, yes, we have talked about the need for having an enabling regulatory and legal framework. Our neighbors next door, Uganda, have a very comprehensive legal framework in place. However, their market is not yet developed. So they have taken it like, let's say, it's a top-down approach. With the help of the Islamic Development Bank or Islamic, because Uganda is a member of IEC, they got technical support and developed comprehensive frameworks, regulatory framework in place. But that has not actually translated into any meaningful work to be done by the market players. For us in Kenya, yes, at the top, we may not be having facilitative regulatory framework or legal framework, but the market players are more vibrant and active in terms of playing their role, their part to contribute to the meaningful growth and development of Islamic finance. But what is needed now is for all the players to come together, whether the financial sector players, together with the regulatory agencies, so that we can move together in the same direction, much as these institutions are competing, but to see that the barriers to the growth and development of Islamic finance industry is overcome. Then the other bit is, of course, we have been in this conversation a couple of times in the past. I know, Brother Farouk, we worked on this through the PMO's office, but now how will it be different? As Dr. Bashir has actually mentioned, how are we going to be different this time to see to it that we do manage expectations well and make the desired impact as quickly as possible? Because now we have the goodwill, and we can exercise ownership and come up with a short-term and a long-term and a medium-term interventions that can be made, and we measure our efforts. Thank you.
Okay.
Thank you for
we
those.
allowed?
Yes, please go ahead.
All right, thank you so much. My name is Khalfan Abdallah. I applaud CMA for the efforts, and all the speakers is a good job. And I hope this momentum will continue so that we have this conversation as frequent as possible. To what I recall, in Kenya, we had seen several developments on the sukuk as well. Of latest, I think we had seen a Takwa SACCOS, which is based in Nairobi, had issued sukuk to its members for the purpose of acquiring a building there that they aim to be a headquarter and lease and so on. So this is also an interesting development in the region. But my point that I wanted CMA to maybe share more light on is we have seen developments in the region, like what has been mentioned in Tanzania. They have listed sukuk here as KCB, as to whether there could be deliberate efforts for this kind of issuances, because the issuer was KCB, so that similar issuance can be available to Kenyans, and be informed as who could be the brokers or platform of which a Kenyan can be able to invest in this Fursa Sukuk that is available in Tanzania, or maybe in future could be Uganda or could be Rwanda and so on. So I wanted that to be a deliberate effort, or suggest or see how such opportunities that arise can be available to Kenyans in order to generate wealth and get an investment platform for themselves. But my second point, or rather a question, is on cross-listing, as to whether what will be the requirements and so on, and whether maybe it can be shared later on through emails for cross-listing such kind of issuances in the region. So like what we have seen KCB issued here, but can it be cross-listed in NSE, and what could be the requirements, and so on and so forth. And finally, as I conclude, I think what we have seen in Tanzania is that though we expected in this region sovereign sukuk to start, and it is important for them to start, but what we have seen are corporate sukuk that have emerged here in Tanzania and even in Kenya. Apart from Takwa SACCOs, I know FCB also had issued privately placed then, and maybe others. I think it is important, the corporates as well in Kenya, to know that it is possible to issue a corporate sukuk in Kenya. As from my previous engagement with the CMA, that is something that is very possible. All that requires is engage proper advisors in order to be assisted to issue this, and it can be very good for the companies to raise finance and so on. So that being said, thank you so much, and once again, all the best and well done for the speakers and for the CMA for this initiative. Thank you.
Thank you for your comments. Probably that very interesting question you asked on sukuk participation locally to foreign-based issuances. Probably I'll invite Brother Abdallah to just Gulf African Bank to just make a brief comment on the same. Is it possible, or what are the challenges? Thank you.
You mean on the issue of cross-listing?
Yeah, cross-listing and also just local participation on sukuk issuances regionally.
Yeah, it's very possible. I think the only challenge that we may have here is, okay, the risk element, but first of all, let me say it's possible, cross-listing, so that we have investors within the region investing from each other countries. But it comes with an added risk of the exchange rate, because when we issue them here, we will issue them in local currency. The Tanzanian one is issued in a local currency. By the time we repatriate capital plus whatever profit that have been made, it will be subject to the exchange rate at the time. So it just gives us an additional risk, which can be, if anybody's happy to take that, cross-listing will be the best idea.
Thank you for that. Time is short. Just want to encourage participants that you can share any further questions to market deepening at cma.or.ke, and we'll be able to get back to you. And as we close the session, I just want to invite Dr. Bashir to just make a comment, and then we can move from there.
Well, thank you. Just not a long question. We saw that from the presentation, one of the presentations, that the Kenya Capital Market Master Plan is still on the cards, and Nairobi International Financial Center was still on the cards. But as you know, people active in the industry, we didn't actually notice the implementation of that. What became of that?
Thank you, Dr. Bashir. Mr. My CEO, Olu Kombara, someone to comment on that question very quickly before we close the session. Thank you, CEO.
Thanks, Joseph. I think the question is very important, and I think it is mainly touching on the issues around Islamic finance, as we had put it in the master plan and also our plans. So briefly, just to say, we did have a lot of work done under the PMO project. And out of that, we had very good, proposals which were made, and we did share with policymakers. I guess listening to what I hear from most of the speakers, we need to revisit those because I think that is where the delay has come from. And it is validly to ask, so what was the achievement around the Islamic finance objectives that were in the master plan? But overall, in terms of the rest of the other objectives, I think you would see there are quite a bit of, progress and targets which have been achieved. It's quite a very, perhaps maybe we need to have a more detailed discussion. The master plan has been actually implemented beyond a percentage of 70%. We've done a review and we have a reviewed version, of course, just capturing the new things which we think must be there. But I agree, the section on Islamic finance may not have really moved much far from where we left it, because I think we need to have more discussions with policymakers, because I think issues have come out very clearly. On the issue of Nairobi Financial International Center, we know now we have an authority which has been put in place. Of course, they have their own laws. They may be looking at certain things in a different focus from what was in the master plan, but we shall work together to ensure as they do what they are supposed to do under the Act, the envisaged gains that were there in all spheres, especially Islamic finance, are not forgotten. So let me just stop at that.
Thank you, CE. I think just to make up the overwhelming reaction I get from participants is, yes, the very big opportunity for this asset class in the country, and we need to gain traction on the significant work done thus far, consolidate the gains as was mentioned, and focus on scaling up. And I think from there, I think I'll just hand over back to Justus to take us through the rest of the program. And just want to thank the panelists as well as the participants for their questions and reactions to the same. Thank you very much.
Thank you very much. Thank you very much, Mwenda, for facilitating that segment. I know David Wagema's hand is up. David, you have a burning one? 2 seconds.
Yes. Thank you so much, Justus. And I think it was towards what Kalfan had asked about the cross-listing. And I note that it is one of the key things that we are keen about. In fact, our MOU with NASDAQ is about cross-listing. And I find that would be a very faster way to market. And we can be able to work closely with the CMA to be able to facilitate that, because once it has been accepted in one jurisdiction, then we can be able to probably accept it if we choose to go that direction. So we can work closely, Bwana Abdallah, and see if you are interested, we can see how to bring that. And if we need any assistance, you mentioned the currency risk, we can see maybe how we can go around about that. But otherwise, thank you. It has been very insightful. Glad to participate. Thank you.
Thank you very much, Wagema, for that feedback. Before we go far, our chairman, CMA, Mr. Ungas, wanted to put across 1 or 2 points. Our chairman, please go ahead and highlight some of the issues you are keen on highlighting.
Thank you very much, Justus. I just want to re-emphasize a couple of things. The lights on my where I am are not good, so I'm going to be offline on the video. I know that. So what I wanted to suggest with regard to Dr. Hassan Bashir and a few other members, Jafar and others, have alluded to the stagnation in moving forward with Islamic products and Islamic capital market products. I just wanted to say, yes, that is very much noted. And I just want to reassure that now with the regime in place, especially on the political side, I think the stars are aligned in terms of being able to push this agenda if we can take advantage of it, that is. And so is also the CEO for Gulf Bank, Abdullah. So I just wanted to give that assurance that the platform is there now. We should be able to achieve quite a bit in terms of the policy, in terms of the regulatory and legal frameworks. Myself being here at CMA, I would like just to let you know that we are taking very personal and keen interest in this matter. And therefore, your support and your collaboration and all hands on deck is required in order to effectively make sure that we get something achieved in this short term, within these 5 years or 4 years, whatever the remaining time is. So I just want to give that assurance and also give our full support to this agenda, and want to get everybody also to be on the same page with us, inshallah. Thank you.
Thank you very much, Mr. Chairman, for that very timely feedback that will be pushing the agenda relentlessly as we seek to entrench Islamic finance in the country. Yeah, so I would want to hand over to Director Luke Ombara, who would want to highlight high level the key takeaway points that we have out of this session. Mr. Ombara, please take up the mic.
Okay, thank you very much. Allow me to just take 5 minutes. I know we are well past the time that we had committed to have finished this. So there are just a few takeaways. I won't tell them, I won't follow this order. I'll just pick those that were really, really outstanding. What we have seen is existing government goodwill and intent to issue sovereign sukuks, and also that in alignment with NIFCA. So in coming up with that, they'd also be supporting the overall NIFCA objective, but specific to making Kenya a regional Islamic hub. We've also picked out the fact that existing policies and regulations are not adequate. There are some that have been there, especially the anchoring provisions, but a lot more needs to be done, particularly to accommodate sukuk issuance. And I think the emphasis in that there are a lot of legal instruments that are scattered across, so you can't really, we need a consolidated legal and regulatory framework. We have seen also as one of the take homes that our neighbors, or particularly Tanzania, has already taken a positive step through the issuance of sukuk. And if we are not careful, particularly in Kenya, we might not be able to achieve our intent to be an Islamic finance hub unless we also follow suit. We have heard about tax regime also not being adequate. There's just a bit that have been done about everything, but it needs to be adequate. Catchy word here, risk has no religion. So effectively, we've also learned today that Sharia compliant products need to be treated just like conventional products, even in the area of risk and rating. We have also picked the lack of harmonized standards, and we've been provided with standard setting bodies, including Islamic Finance Services Board, and all these that have been mentioned that are able to address the issue around harmonization of standards, but particularly what has stuck out is the need for a centralized Sharia supervisory or advisory board. Then lastly, of course, there are many things, but I thought with my team that this should be among those that you should take home with, and a requirement for a dispute resolution mechanism. So there are no disputes, especially where a product is issued in another jurisdiction when it comes to investors. So based on that, we've been able to pick 8 policy issues. One is on terminology, lack of standardization, and the need for a centralized Sharia governance model. The next is legal and regulatory policy framework. We need to be able to come up with a comprehensive one. And hopefully that will tackle another gap in how we are going to treat in terms of accounting these products and services. There's the tax element. A major concern, which is a policy issue in our opinion, is capacity building and strengthening of Islamic finance professional practice, where we've said in one instance you have Islamic scholars with little knowledge of finance and finance experts with little knowledge on Sharia principles. Another area related to that is on financial literacy. We have appreciated at this event that there's very limited knowledge, not just by potential investors and issuers, but even to the extent in which you can be able to package Islamic financial products such as a sukuk. Overwhelmingly, the issue is around coordination and a platform to be able to fast track issues from where we left. And the CMA has been called upon, and we have received reassurance from our chairman that we will take that role in bringing all the players together to promote synergy towards issuance and secondary trading of Islamic financial products. Then the issue that has come out, I think in the last comment, has been need for possibly cross-listing. That it is a policy issue, and how we can be able to allow East Africans under the Common Market Protocol to be able to access issuances in specific jurisdictions. So this is a draft on a way forward. We need, number one, to resolve pending policy issues. I think one was asked in terms of what are we doing with regard to governance? So we need to go back to the National Treasury, at least to give us direction on how we are moving on the terminology and which governance structure we are adopting, that is between a centralized Sharia supervisory board, or whether it's going to be a centralized Sharia advisory board. This was supposed to be provided through a policy, a national policy, but in the absence, or if we are to fast track this, maybe these two major issues, terminology and governance, if National Treasury can be able to give us policy guidance, we seem confident that we can be able to address the other issues, particularly on the regulatory framework. Government, we are proposing, and I think our PS was able to indicate that, either issue a sukuk to provide some kind of benchmark to corporate sukuk issuers, or at least continue to allocate a sukuk component in the government issuances as they are rolled out every month as per the Treasury bond issuance calendar. Based on the experience that we've seen with Tanzania, there's room to, in the meantime, because developing regulations may also take some time, depending on how fast we are ready to issue some of these products, we can be able to use our principle-based regulatory framework to support either sovereign and corporate sukuk issuance. Very, very overarching, we need to now come up with a very comprehensive legal and regulatory framework. And the good thing is that we have already developed white papers through our consultants. I think without taking a little more, too much of your time, I'll only focus on the issue of infusing Islamic finance capacity building and sensitization into our own program as CMA, because we have detailed capacity building programs, but we will consult with the industry and the scholars and all the professionals that we have here, including His Excellency the Governor of Garissa, so that we can be able to come up with a very structured capacity building for both investors, issuers, and market intermediaries. We'll be sharing this with you, distinguished participants, so that you can be able to just help us concretize this, particularly on the timelines and responsibility. Otherwise, thank you very much for listening to me. This is our proposed way forward. Back to you, Justice.
Thank you so much, Director Luke, for that feedback. And it's a very good high-level summary. I see Nathib's hand is up. Governor, you can go ahead and put across your feedback. Okay, perhaps he's preparing for the same. So at this point, as he...
Can you hear me now?
Yes, go ahead.
No, I was saying we normally go to mosque in Garissa earlier than Nairobi. So I have to leave now. But my final points are: this is a very good initiative, an initiative hopefully that will see the bringing out or coming out of the stagnation that we have faced over the last few or several years, for that matter. My conviction is one, that I think we have just been lacking the necessary political goodwill, or indeed, our own bureaucracies as Kenyans. We just need to come out of that, because I remember, and I'm glad that we have serious Islamic professionals and here in this forum, the likes of my brother Abdul Khalid, Dr. Hassan Bashir, Dr. Ibrahim Lethome, and Sheikh Khalfan, and many others. I'm quite impressed that actually you have managed to bring together such an impressive team into this discussion this morning. I remember when we came up with the first Islamic financial initiatives in this country about 13 years or so ago. We were repeating the same words with Professor Njuguna and the rest of the colleagues that were supporting us. At that time, the chairperson of CMA was a lady. Hello, can I be heard?
Yes, we can hear you.
Yeah, at that time, the chairperson of CMA was a very, very positive, a very, very strong lady by the name of, I don't know whether it was Kilonzo or Kalonzo, who was the chair lady of the chairperson of rather CMA. And we were talking about the same words that we're saying today, that Kenya will be a hub for finance, Islamic finance in East Africa. In fact, I will regard it as shame, unfortunately, that 13 years down the road, we are talking about the same words when our colleagues, when our neighbors rather, who are far behind us, i.e. Uganda and Tanzania, have passed us in every way possible. You have heard this morning, and that's the reality, that actually Uganda today has a full-fledged Islamic Finance Act, while Tanzania has even gone further and has even launched Sukuk. And we are still talking about Kenya will become a hub. We have every reason to be a hub, but I think we need to move fast. And that is the message this morning. And I'm glad that we have new blood now in CMA. I like the commitment and the very, very encouraging words of my brother, Mr. Ogas. And as I said earlier also, it cannot be better. We have the opportunity now also of Professor Njuguna, also is very, very positive in this matter. Let us move on quickly. There's no really much, I don't think there's much left. If we continue talking about capacity building, we have enough capacity in this country. A lot is there that can be done very quickly. For instance, the issue of corporate sukuks. And I'm glad that there are good brains in this discussion. We can even away from looking for a full-fledged legal framework, the Sharia contract itself can actually be structured in such a way that we can have a contract that binds the people into a legal framework that is still that can still be managed easily through the courts if need be. And therefore, we do not go on waiting for a full-fledged legal framework, because in Islamic finance, the Sharia contract is itself a very, very comprehensive perspective. So all I want to say is that really, I think this is a very, very important forum this morning. I'm glad that I've been asked to come on board. Thank you very much for inviting me. Let us quickly create a panel. You already have a very good team of brains in this forum. Put them together, and let's just have a quick discussion on this matter, so that really we drive this matter faster than it has. That stagnation to me, gentlemen or ladies and gentlemen, for that matter, was unnecessary. Asanteni sana, and I wish you all well.
Thank you very much, Governor, for that feedback. For just to ensure that we have no doubt, the current framework is able to allow issuance of Sukuk, despite it being high level, as we said. So nothing stops that process from moving forward. So at this point, I wanted to hand over to Mr. Shamia, who will then give his feedback in closing, so then we can wrap this up. Sorry, we have gone beyond time, but we are trying our best to close it as quickly as possible. Mr. Shamia, please.
So thank you so much, Governor. I think I don't want to add much to what you say. I want to promise one thing, that as it is, we are willing to look at any application which is actually based on what we have discussed. And we are open also to have discussions with those who think they can do the transaction arrangement. I'm happy we do have very many experts in the call. So anytime, please feel free. I think we are willing to have that discussion. And of course, we see how quickly we can pick this. We will do that as we also approach our policymakers. I'm happy the Nation Treasury is represented in the call, and also through the speech of the CS, we got a lot of assurance and support that the government is willing to go all the way to ensure Islamic finance develops as it was expected. Personally, I also had the president speak. I hope you can hear me. I hope.
Yes.
Yeah. So I've heard even the president mention that we need to go ahead and see how we develop this Islamic finance sector, issuances of Sukuk. And I know, even with the current regulatory framework, as Justice has said, we will be willing to facilitate any transactions that come to us. But allow me to thank everybody else who got an opportunity out of your very busy schedule to sit with us for this few hours. I think the lesson we see, maybe we need to find more time. I also want to commit that we will be arranging more such forums where we share different aspects of what is before us. I also promise that out of this, we will actually engage you on the action plan that we have shared. We see how we can form perhaps a panel that can help us here to, of course, achieving some of those things even much faster. But as the chairman of CMA spoke, I think we take this guidance very seriously. I just want to mention that we have entirely, almost the entire board here. Let me just mention, we have nearly all the directors from our board in attendance. We have Professor Bowen Michael, Gibson Kamau Maina, Natasha Oduo, Meshach Moses Kiprono, Elena Pellegrini, Musa Kadanje, and Christine Kanini. So, of course, you see how serious the board is taking these matters. But allow me also to just thank those who have actually graced this function today, those who have spoken, our peers, economic planning, peers James Mahati, our chairman, Yugas Mohammed, David Wagema from NEC, and then obviously, again, just very wonderful presenters, all the way from Radha, Abdallah, Anur, and particularly to say thanks to Justice Akoti, who has really done so much in putting together this very good forum, and also doing the MC, plus also making a presentation, as well as his director, Luke Ombara. Thank you so much. We will be coming to you very shortly. We will arrange another forum where we continue to share a bit of more of what we are doing, but our promise is action as we try to see how we take advantage of the opportunities that we have. Thank you so much, and back to you, Justin.
Thank you so very much, Mr. Shamia, for all that feedback, including thanking our board for gracing this occasion. I just don't want to add much more because you all should feel appreciated for all this effort you put in to ensure that this session succeeds. So at this point, I just want to hand over to a colleague, Karo Mbachu, who will take us through a short prayer. And then after that, you will be free to log out and have a nice rest of the day. Karo, please go ahead and take us through a short prayer.
Good afternoon. Please let's pray. Father God, we bless your name this Friday afternoon. We thank you for the gift of life. We thank you for the meeting that we just had. We pray, God, that you may continue blessing us, continue blessing this industry, God, continue blessing the capital markets industry as well, oh God. Bless every one of us who was here. Bless our presenters. Bless the authority. Bless our attendees, oh God. Yeah, meet us all at our points of needs, oh God. As we conclude, oh God, be with each and every one of us, oh God. Whatever deliberations we've made, oh God, yeah, may we be in a position to progress and realize outcomes. For this we pray in Jesus' name. Amen.
Amen and amen. So thank you so very much. We promise that we'll be hosting similar events in future to push this agenda. Have a nice day and see you next time from here. Thank you.
Thank you.
Thank you very much.